Hey everybody, how's it going? So I've got a camera here and a screen up there, but my laptop is here. I'm really I've got a great tech setup, but it's going to look like I'm looking in some odd directions. So I'm in the Vancouver office, the headquarters for Mogul in Vancouver, not in the Edmonton office today. But I understand based on, well, I don't even know what a snow squall is, but it doesn't sound like something I wanted to participate in. So I definitely am smiling today being in the Vancouver office. I ran into people in the breakout room. There's someone from Toronto who tuned in, which is super cool. So I don't know where you are anymore, but welcome. And lots of our Vancouver folks, lots of Edmonton folks. So it's super exciting to be back for the new year. I know that for those of you who have been attending for many years, the change to the third Wednesday may be a shock. So hopefully there aren't people thinking it's next week who are missing out right now. And if you are, I apologize. And if you're watching the recording, we'll catch you in February live. The reason we made that change is we got feedback many times that being on the last Wednesday of the month, for those of us who are landlords, many times interfered with landlording, rent collection, end of the month responsibilities with properties. So we shifted it up so that all of you landlords out there can make it to the meeting without too much challenge and inconvenience. So just trying to give the people what they want. Like Devin said, we've been doing this a long time. The first Mogul Mastermind was an intimate group of 20 people talking real estate back in September of 2015, and we've grown into a really great event that's really meant to just help investors do awesome things with their real estate portfolios, share ideas, share opportunities, and ultimately just get a chance to talk to their fellow investors. Real estate investing is often, it can be a lonely gig. If you're the only person in your sphere of friends or the only person in your family who does real estate investing and you don't have anybody to talk shop with, sometimes it's just nice to have someone to talk shop with. So for now, we're Zooming, but as soon as it's safe and as soon as it's acceptable, we're going to go back to our venue in Edmonton, which is just a beautiful converted warehouse. We've got in Vancouver, just a little teaser, the venue that we've sourced moonlights as a yoga studio. So it is a very beautiful, very zen space. So when we host our Vancouver edition of Mogul Mastermind, the room that we have is just delightful. So we're really looking forward to getting together in person, putting on our masks, giving each other some elbow bumps, and doing some proper networking. Because when we attempted to do the meeting in September, right before things tightened up again, and we got great feedback. Everybody had an awesome time, and I can definitely tell everybody was missing out on that in-person experience. So it'll be good to get that back, but for now we're Zooming. So I'm going to pop into a market update. I'm going to keep it pretty simple today because we have so many great speakers that I don't want to get into a crazy in-depth market report that takes up too much time. So I'm going to go over some very key highlights, and I'm going to let the numbers really speak for themselves. So one of the things that I want to pay really close attention to in Edmonton is the inventory. 3,800 houses on the market in December. That's awfully high for a December. And I think what that milestone tells us is that there was a lot of confidence returning in the market, and because people didn't get the chance to maybe market during COVID, they kept their houses on the market. That inventory led to a lot of investors sourcing a lot of deals, because when there's more supply than there is demand, there's deals to be found. Another very interesting shift in the market is the days on market. So you can see we were pushing 70 days on market last December. This December, it was sub 60 or 60 in all cases, which means that houses were getting snapped up faster. So what that looked like from our perspective of being realtors on the ground is that there was pent up buying demand with increased inventory. Anything that sold was selling pretty quick. All the realtors on our team can tell you we did engage in several multiple offer bidding wars in that month of December, which was kind of surprising, but also kind of encouraging. And then when we look at the average selling price, you know, this is a really nice December to December comparison. So we can see that the prices got a little bit stronger on average year to year from December to December. However, they dropped in price from November to December. So that actually is a really good news story for me, and I'll tell you why. Because every year prices soften from November to December. That's not a COVID thing, that's an Edmonton thing. Winter starts, people don't want to move, and the market slows. So that's pretty natural, and that's really not too alarming. What is encouraging is the year-over-year prices actually increased by 1.17%. The market got stronger during COVID in spite of all of the fear, all of the uncertainty, and all the craziness. So, you know, that to me signals the fact that I think Edmonton is probably just going to keep on trucking, to put it bluntly. I don't think that we're going to see a big scary market crash, but I also don't think we're going to see really aggressive growth either. We're on trend to basically do what Edmonton has done for the last 4 years, which is kind of just flat, balanced to buyer's market, and pretty stable stuff. We'll have a quick peek at Vancouver, and then I'll hand it back to Devin. So when we look at Vancouver, I mean, Vancouver, you know, what can I say? This is a market that just doesn't quit. When we look at the 1 month over month change, almost all positive growth. When we look at the 3 month change, almost all positive growth. 6 month change, almost all positive growth. 1 year change, almost all positive growth. A couple of interesting points here: Sunshine Coast 22%, Bowen Island 28%. It's because everybody said screw COVID, I'm getting the heck out of the city and buying a nice property on an island in a nice vacation destination. So that was pretty obvious, a pretty obvious trend. But when we look at the heart of the city, you know, across the board, we're seeing like 5 to 8% growth in average house prices. Like that's COVID not really slamming the market that hard at all. If anything, it was a good news story for Vancouver investors, because we did have a dip when everybody was in their COVID fear, where there was enough breathing room to actually place offers, do some negotiating, and get a deal. But as we're slingshotting around into 2021, expect Vancouver to start doing Vancouver things again, which means multiple offer situations, short days on market, limited inventory. I think we're in for more of the same. The final point that I will put a spotlight on is the interest rates have dropped substantially, which is just a big capital exclamation point opportunity. I mean, when we thought interest rates were historically low 5 years ago, 6 years ago, I guess we were wrong, because they're historically lower. So there's never been a better time to do the cash flow strategy, because money is just so affordable to borrow. I was chatting with one of our investors in one of the breakout rooms, and we were comparing notes. She just is getting a CMHC mortgage for like 1.45%. I just renewed a 24 unit building on a 1.55% mortgage, which is, it's unreal. It's unreal. I mean, if anything, I would say it's a great time, especially in Edmonton, considering we're not getting a lot of market appreciation. Just a last little tidbit. I think a great strategy is just accelerate that mortgage pay down. So instead of leaning too heavy into cash flow, be conservative, plan for the future. And, you know, with a 1.8, 1.9% interest rate, you don't need that 30-year amortization to cash flow anymore. You might be able to make it work with a 20-year or a 25-year or maybe even a 15-year. I say if you don't need the cash flow, go for it, because putting that money into your own pocket in the form of equity in your property really gets you to that finish line of financial freedom faster when you don't have any more debt. So just a parting thought: take advantage of the free money, take advantage of the fact that it's a buyer's market. And, you know, everybody, we're off to a great start this year. And the speakers tonight, I couldn't be more excited. So Devin, I'm gonna hand it back to you. And there's our quick glance at what the trends are looking like, rounding the year from 2020 into 2021.